You can get 2 martinis for the price of 1. And looking down from the balcony here you can see a number of the tables in the bar, and a number of them have martini glasses on them, so people are taking advantage of the martini special as well as other fine food and drink and other victuals that are served up at the Peacock Alley American Bar and Grill in downtown Bismarck. A wonderful place to eat and have a interesting time looking at the pictures on the walls. It's a fascinating historical atmosphere, and I would encourage everyone to come down and sample it. We're going to be speaking tonight to some credit union executives about credit union issues. This hour of the legislature today is sponsored by the Credit Union Association of the Dakotas. We're going to be speaking to Melanie Stillwell. She's a member of the State Credit Union Board and President and Chief Executive Officer of the Western Cooperative Credit Union, which has branches in Williston, Dickinson, Ray, Beach, Hebron, and Glen Ullin. We also have with us Mr. Robbie Thompson, who's the President and Chief Executive Officer of the Credit Union Association of the Dakotas. First of all, let's talk a bit about what happened on during the legislature today. There were a number of issues that came up of interest. First of all, the governor himself, Jack Dalrymple, made a presentation of his education finance bill to a joint hearing of the Senate Education and Finance and Tax Committees. This bill increases state aid to schools dramatically from the grant program that is the primary program that benefits local schools is increased in this bill from $918 million over 2 years to $1.7 billion, more than $1.7 billion. This bill includes or provides for enough money to reduce property taxes on schools, property taxes charged by schools to property taxpayers of more than 30%. So we'll see hopefully a smaller property tax bill in North Dakota if you are a property owner. It also greatly increases state aid. When all is said and done, the state government, the state taxpayer, is going to be paying approximately 80% of the instructional costs of individual school districts. For a long time, the goal has been 70%, and more recently, in fact, within the last 10 years, it's been around 50%. So the amount of state aid that is going towards schools and the percentage of the cost that is being paid by state taxpayers is going up dramatically. And we will see what happens to that legislation. There was a hearing about a prepaid wireless emergency 911 fee. Folks who have hardline telephones and regular cell phone contracts already pay a fee to support the 911 emergency system. In most places, it's $1 per line per month. This bill would require 2% of gross sales at the retail of if a business sells wireless prepaid wireless agreements to someone, they would have to pay 2% of that as a tax to support 911 service. There were a couple of there were a couple of abortion bills in the Senate Judiciary Committee. One of them would prohibit abortions for sex selection or genetic abnormalities. Another one would prevent abortions after a fetal heartbeat is detected. That's usually about 6 weeks into a woman's pregnancy. The critics of that approach say that it's possible that a woman could not know she is pregnant and would not realize it until after 6 weeks, after which she would not be able to get an abortion in North Dakota. There is also no exception in this bill for a pregnancy as a result of rape, which has some folks wondering whether that is a good idea. There was legislation about limits to drone surveillance. Drones or unmanned aerial systems, as the military types like to refer to it, are occasionally used by law enforcement nationally. They have been used in North Dakota on very rare occasions. And the bill that was debated by the Senate Judiciary Committee today would require law enforcement to get a search warrant in order to use a drone to surveil citizens in North Dakota. And this drew some opposition from police agencies and also from the University of North Dakota. And because the University of North Dakota is part of an effort to make northeastern North Dakota into a federal UAS, or unmanned aerial systems, testing ground. And they are afraid that legislation that would restrict how data from drones can be used would interfere with their efforts to get Federal Aviation Administration approval to use this area of northeastern North Dakota as a drone training ground. And so we will see how that comes out. The Senate Judiciary Committee is going to be meeting on that bill tomorrow morning, and one of the attempts is going to be essentially to punt the issue for a few years and make a study and study all of the issues that arise from using drones for surveillance. In the meantime, we would like to get back to our main subject for this hour, and that is credit unions in North Dakota. And one of the things we're going to be talking about is a rather interesting problem that credit unions and banks, financial institutions generally, are having, particularly in western North Dakota, and that is that their clients, their customers, are bringing them too much money. This causes some problems for bank or for credit unions. I mean, it seems like it'd be a rather excellent problem to have, but it is a real issue. And we have with us on the telephone Melanie Stillwell. She is the President and Chief Executive Officer of Western Cooperative Credit Union, which has branches in Williston, Dickinson, Ray, Beach, Hebron, and Glen Ullin. Welcome, Ms. Stillwell. I don't think we have her on the phone presently. Mr. Thompson, we have also with us Mr. Robbie Thompson. He's the President and Chief Executive Officer of the Credit Union Association of the Dakotas. Mr. Thompson, why is it that taking on more deposits is a problem?
Well, isn't that a problem that we have today, in that in some parts of the state we're just taking in so much money. And unfortunately, nobody really feels sorry for anyone who just seems to be taking in too much money. But from a regulatory standpoint, it makes it very difficult. And the reason why it is that as the money continues to come in, it outpaces our earnings. And as it outpaces our earnings, it decreases what we refer to as our net worth, or our capital position. As our capital position goes down, credit unions in the entire country were capitalized at around 11% before the financial crisis. Right now, it's down around 9.5, 10. It's about that same ratio in North Dakota, but it continues to fall as we get more deposits in. As we get closer to the 7% capital ratio, that's a statutory requirement that actually says once we're at the 7%, if we fall below that, we fall under what we call prompt corrective action, and our regulator then can step in and require us to do some things to bring that capital back up, and it requires a lot more oversight from our regulators at that point in time.
And what, Ms. Stillwell, I'm sorry, I referred to you earlier, and I don't think you were on the phone at that point. I'm sorry about that. Ms. Stillwell, could you explain to us why is it that getting too much in deposits is a problem?
Can you hear me now?
I can, yes, ma'am.
Okay. Well, as Robbie said, we are required to keep a certain percentage of equity from our assets. So if we're supposed to be around that 9-10%, we have to grow our equity along with the growth of our assets, which is the money that's coming in. And here in western North Dakota, sometimes we can have really, we're not talking big checks as in $20,000 or $50,000. We can have literally millions come in a day or in the month. And to keep that equity ratio of that 10%, you need to have 10% of income, net income. And credit unions are nonprofit, and they don't make money to make money. You know, we try to return it to our members in the form of lower rates and fees. But when you bring in $2 million, you need to have $200,000 in net income. And that doesn't happen in this low-rate environment that easily. And growth, if it's controlled, is fine. But when you see some of these $1 million checks that want to come into your institution, you really have to manage that balance sheet a completely different way than we're used to. And it's hard. It's a challenge.
Ms. Stillwell,
that money has to go somewhere. It has to be lent. It has to be invested, and you almost can't lend it as fast as it's coming in.
okay, I guess that's a point I wanted to follow up on. Basically, you're getting a lot of deposits, and when you get more deposits, you have to invest those deposits or loan them out in order to increase your asset base, and you can't find enough people to loan the money to or get investments that are good enough to keep your income up because we have low interest rates, as everyone knows. Is that a correct interpretation?
Exactly, and it's not always just oil money. I don't want to make it sound that way, because many credit unions across the nation are seeing that deposit money come in due to the fact that people do not want to put money in the stock market when it's not performing, when their 401ks are not performing. They just want it somewhere where they feel it's safe and sound. So it's not always just in western North Dakota. I think it's across the country in some respects, but maybe at a much faster growth level here in North Dakota.
Can you tell me how this money comes in? I mean, do people bring in suitcases full of cash, or what's going on?
It's mostly coming in through wires. They're wiring the money, or it's a cashier's or certified check. Because what we're seeing is people selling land, and that's a very big check that comes as a check. Or it's not cash. It's not, the dollars in their hand. It's big checks of businesses that have been sold, or houses, or land, or oil royalty checks. So it's coming in checks or wired money.
And how big are these checks sometimes?
Well, they're anywhere from, it is not unusual to see a $200,000, $300,000, $400,000 check. We have seen a $9 million check, and we've seen a $14 million check, which that's huge. I mean, it's not something anyone wants to walk in the door in one day.
Speak for yourself.
Well, it's not ours.
Yes, that's true. I was just thinking, when you get a $14 million check, I mean, do you get the other folks at the credit union to come and look at it? Because I certainly would like to see what a $14 million check looks like.
Yeah, I've never seen one before either.
Well, I think you should put a pretty long hold on a $14 million check,
yeah.
though.
But the thing, too, with that kind of money, we are an insured institution, but we're not, each person's money is insured federally by the federal government up to $250,000. And really prudent investing, you don't put all your eggs in one basket. And many of these people have never had this issue, and they don't even have a financial planner or anybody like that working with them. So they need to talk to these financial planners and find out the tax consequences, and not just dump it somewhere and think that it's going to stay there.
Ms. Stillwell, have you ever had to turn money away?
Yes. Actually, we do. We've, due to the fact, as Robbie was saying, our capital level at one point was 10.5%. And with our fast growth, because we were seeing $20, $30, $50 million growth, our equity ratio started going down, and it got down to about 8.5%, which really is not where we wanted it. So we had to actually do some drastic things as far as not paying very much money at all on dividends or interest. And we to actually refuse to take some of the larger checks, especially if it's someone that's never done business with us before. It's hard when your longtime people come in with big checks, but people that have never been in your institution institution and they just want to plop down $1 million, it's, because it's the closest place to their business, we have refused that money.
And what is the reaction of customers, especially the new folks, that have their money turned away? Because I imagine that they don't intuitively understand why you're doing it.
They don't, and we try very hard to have them visit with one of our managers or supervisors so we can explain it to some extent. But it's something I never thought I would see in my 27 years of working in credit unions, and it's back to the requirement of keeping your equity at a certain level. And if you cannot make enough income, you have to stop the growth. And it's a hard thing, but we're required to operate in a safe and sound manner, and we've been here 75 years, and we want to be here another 75 years, and sometimes you have to make those tough decisions.
Do folks want to keep large chunks of money in your credit union? Because what I was thinking of is the $250,000 insurance limit. I mean, despite the fact that the insurance is limited to $250,000, are there folks willing to put a lot more than that in the credit union?
There is. In fact, I mean, there's much more money. Some people have. I've seen $2 million, $3 million, and they know it's not insured past the $250,000, and they do. I think they know that we've been here for a long time, and I think they just feel comfortable with that. But that goes back to you need to be visiting with your financial planner and know what you should do with some of these funds.
Do you have any difficulty with regulators on this issue? And the reason I'm asking is because for example, if we didn't know what your context was, if we didn't know that you're in the oil patch and the oil patch is doing well financially and people are, they're selling land, they're getting royalty checks, they're getting large chunks of money. If I'm just sitting there and I don't know any of these things and you're talking about how I got $1 million and large checks, I'd be thinking, well, what are you dealing with, the Colombian drug cartels or something? And what is it that's generating all this money? I'm wondering if this influx of money gets any questions from your regulators and how you explain it to them.
Well, our regulators do look at it very closely. They understand what's happening and how it's happening, and yet they are concerned to make sure that those equity and reserve ratios stay at a comfortable level. But they very much understand what's happening. Our regulators are mainly the state regulators out of North Dakota, and they see it not just in our credit union, but in many of the banks and other credit unions in the state. So they're understanding, but they also watch it very carefully.
And they really are obligated to take action if they fall below 7%. That's mandated by statute. So there is, I'm certain why they are patient and understanding and try to work with them. If it falls below that ratio, they have to take action.
Ms. Stillwell, what do you do to keep your ratio up? I mean, you have this difficulty with it going down if you take in too much money. What is it that you can do to get your ratio up, and what is it that you are doing?
There's really right now only two options, and that is one of the things that credit unions are asking is to be allowed to have what's called supplemental capital, which is not allowed at this time through our regulator. And that would help because you could bring money in that would be counted as equity, and it would be part of your ratio. But we are not allowed to do that right now, and we're working on trying to get that passed through the national level. But there's really only two things you can do to keep that ratio up. You either don't grow, so you stop the growth and you stop the influx of money, or you make a lot of net income, because the only way we grow our reserves in credit unions is through net income. So we either have to have money from investments, money from loans, or money from fees. We have to control our operating expenses, and we have to pay dividend or interest rates on our member funds at a lower level to help that income.
Ms. Stillwell, this is, I guess, a bit indelicate, but does this situation make you more willing to make riskier loans because you need to make loans and you need to make money on these loans? And does it give you an incentive to make riskier loans?
It does not in our credit union, because we take pride in the fact that we've always operated in a very safe and sound manner. We've had very few loan losses throughout the years. And honestly, the loans, you could take that risk, but in the end, it's going to affect your equity and your income anyway, because you'll be expensing and writing those losses off. And I guess our philosophy, our board of directors' philosophy, is that we do not turn around and take the risks out there to try to hurry up and bring in income.
Very well.
We would rather work slowly through the other issues.
So, is it fun doing what you're doing now?
You know, it is some days, but I have to say that the last 3 years have definitely been the most challenging in my career. And it's not just the ratios, but it's the workforce. We've seen turnover that we've never seen before. We've had to compete with wages at a very high level. The people are coming in that we don't know. We used to know everybody, and so it's, we have great staff and board, and that makes it fun, but it is much more challenging and stressful than it was 5 years ago.
Thank you, Ms. Stillwell. We've been talking to Melanie Stillwell, the president and CEO of Western Cooperative Credit Union in Williston, Dickinson, Ray, Beach, Hebron, and Glen Ellen. We also have with us Robbie Thompson, the president and CEO of the Credit Union Association of the Dakotas. We'll be back in a moment.
The Legislature today is brought to you in part by Prairie Outpost Log Homes.
Live from the Peacock Alley in downtown Bismarck, North Dakota. The full name is the Peacock Alley American Bar and Grill, and we have 2-for-1 martinis here tonight. Unfortunately, I have not partaken of any of them, although it may sound like it. We have with us Mr. Jeff Olson, who is the Vice President for Advocacy for the Credit Union Association of the Dakotas, which covers North Dakota and South Dakota. We also have the estimable Senator John Warner, who is a Democrat from Ryder. He is the chairman of the Senate Democratic Caucus and an accomplished singer and just a generally worldly guy. He knows a lot about a lot of things. And we're glad to have him. We're glad to have everyone. And Jeff, Mr. Olson, I wanted to ask you about something that was raised earlier in the show, and that is the problem of, if you can call it that, of credit unions being brought in too much money by their customers, their members, and how they have to deal with that. And there's a way of dealing with this called supplemental capital, and I was wondering if you could tell us about that and why it's significant.
Well, thank you, Dale, and again, it's a pleasure being here. Supplemental capital is kind of a complex issue for credit unions, and we've heard this last week when we had Mr. Entrigan on here from the North Dakota Department of Financial Institutions. The capital really is king for credit unions and small banks, and we had some legislation go through the last Congress that was addressing this. We have our regulator that says that credit unions need to look at capital and expanding their capital base, and they're moving forward with that. We do have a connection with the Senate Banking Committee with Senator Johnson as the Senate Banking Chair, and also Senator Heitkamp is also on the committee. So we think we can make some headway and really look at some of our capital issues. And you heard from Melanie up in Williston, and it's not like credit unions are having issues, it's also small banks because of the amount of and the influx of money that's coming in. But there was a bipartisan bill introduced in Congress on February 14th from Representative Peter King from New York, and who's a Republican, and Representative Brad Sherman, who's a Democrat from California. And it's a bill that will it's a supplemental capital bill that really will allow well-capitalized credit unions to match growing deposit base from a growing membership with capital from sources other than just deposits. And there's several ways where that could look. Let's say you are a member of a credit union. You have to pay, let's say, a $15 to $20 membership fee. You could opt in to pay more at a risk base, and also mean you could also get more interest rate and more return on that. And that would allow the credit union to take that money and put it back into their community, back into Main Street, and loan it out and make more money on it. So.
And one of the things that I'm still trying to grasp here is the idea that getting more deposits, a lot more money, customers bringing you money, wanting to put it in your institution, that causes a problem. I'm just trying to understand that. It's
perplexing, and I think Commissioner Entriger was agreeing with us last week on it doesn't make any sense. But we are mandated to, as credit unions, we are mandated that we have to we can only make money through retained earnings, and that is through fees and some of the things we can make servicing our members.
So, in other words, the incentives are if you have a situation like this, if I could be, really blunt about it, your incentives are to charge higher fees to your members and make riskier loans because you need to get your retained earnings up. And you have to do it some way.
You have to do it some way. Even though we are not for profit, we still do have an obligation to our members to make a profit.
Senator Warner, would you like to have the problem of people bringing you too much money?
I certainly would. At the state level, we do actually deal with that. The Bank of North Dakota has some of that problem, and it's a little more complicated and a little more bizarre because the state of North Dakota is making such massive deposits into the Bank of North Dakota, the Bank of North Dakota has trouble retaining its equity position. And so we've circumvented that to some extent by having the bank retain its earnings rather than transfer profits to the general fund for 2 or 3 bienniums now. We've left the profits in the bank. They're retained earnings then, and they can count as equity rather than as deposits. To some extent, the Bank of North Dakota, as a government entity, it doesn't have to face the same kind of regulation that a credit union or any other bank does. It's largely self-regulatory, but the bank is very careful to maintain a parallel structure, to keep an eye on so it's not getting too far out of line with the kinds of standards that are common in the banking industry.
Senator Warner, are you a member of a credit union?
I am a proud member of 2 of them, actually, and my wife and I both at different times have been on the boards of the same credit union, but 2 of us at separate times and in separate positions. She actually had a supervisory position over my position, but not at the same time. So.
Would they let a husband and wife serve on the board?
I doubt it. I think that there would be a conflict of interest. We were on at different times.
Written policy within the credit union to allow that, but you could be on a supervisory committee, which is totally a separate entity that would oversee cash transactions and cash counts and things like that. That would be allowable.
Yeah. Senator Warner, what do you like about being in a credit union? What appealed to you about it?
They're tremendously personal institutions. I mean, you own them, you understand the ins and outs, you're entitled to know the financial transactions, you understand its profitability, and it's not so profitable sometimes. And there's a very special degree of service. When I go to my credit union, if I have a more complicated transaction than what I would normally do at the teller window, I have the same person all the time. I have, it's a big credit union, there are other people, but I always I have my same go-to gal. And she'll visit with me. She understands my finances. It's almost like having a personal banker, at the very executive level that we have from if you were a major depositor in a large bank, that I get that in a hometown credit union.
Do you remember when you made your first deposit? And one of the reasons I'm asking is because Senator Tim Mathern from Fargo, the Democratic senator from Fargo, former candidate for governor and a longtime legislator, he has a fascinating story about when he made his first deposit in a credit union. It was from earnings from ducks that he raised as a small child. And I was wondering if you had some story like that about, your first deposit in a credit union, or did you make a few bucks as a young man?
I would suspect it was probably birthday money, and it was probably at the age of 6 or 8. I've had a credit union account for longer than I can remember. it's it's just a coming of age ritual to get your credit union account.
Mr. Olson, we were talking earlier about things going on in Washington, and one of them is the Consumer Financial Protection Bureau director, and whether that person can be confirmed by the Senate, and because I understand that his appointment is under some scrutiny. And could you tell us about that?
Well, that's an interesting thing, and I think we have to look back to some of the board members on the labor board that were just challenged recently. But I think Mr. Corduroy, whose appointment some will say was done during a small, never been used before power by the president, so people are questioning his authority already in that position. But I think he's been in that position, and he's proven his worth. And I think some of the hearings that went on today went pretty well and were in his favor. And let's face it, Dodd-Frank is the law of the land, and the CFPB is part of Dodd-Frank, and Mr. Corduroy is running that show. The nice thing about Mr. Corduroy is, for us, from the credit union side, and because, again, we do have Senator Johnson as the Senate Banking Chair, is he's been very open to us here in the Dakotas. We have met with him a couple of times, one in Sioux Falls and once in D.C., and he's been very open to hear our issues. We're not always, pleased with what we hear, but basically he's been mandated by Congress to take care of certain things and to regulate this industry.
There's also, I understand, a matter coming up that you won't have to mail out these wonderful privacy notices every year, and we won't have to look forward to getting them in our mailboxes. What about that? Well,
it's one of those burdensome regulations that's been going on for a number of years. It's called the Privacy Notification Act, and what happens is you get these from your credit card company and from your bank and from your credit union. They send them out every year. Credit unions have spent billions of dollars since 2001 sending you that privacy notification bill, basically saying we will not release your private information to anyone and so forth. Here's our policy on that. And really nobody looks at them. Do you look at yours?
I look at them for a few seconds.
Okay, occasionally. The research that we have is that people generally don't look at them, and they just throw them away.
But once I don't see any pictures on them, I throw them away.
What this bill will do is it will allow credit unions and banks and other financial service industry people to send those notices out only when their policy changes. Now, isn't that logical?
It would seem so, yes.
And our research also says that the consumer and the members will look at their privacy notice if they only get them when the policy changes. So it'll save millions of dollars. I don't know how the Postal Service will feel about it, but it'll save millions of dollars in operational costs for credit unions and banks. And it's just one of those no-brainer kind of legislation acts that Congress needs to get done. And they were just about ready to get that done at the end of the lame duck Congress in 2012. But we were falling off the fiscal cliff, and this bill, which did have a lot of support in the House, didn't get done. So it got reintroduced. I got a text and a phone call actually from Congressman Kramer before we came up to the studio. He said, "Hey, Jeff, we're going to vote on this bill. I'm going to support it. It's a good bill. We need to get this done for you." And then and there has been some. We're trying to figure out what really happened. Is it looked like there was a voice vote done, but then I also got a text from the congressman said that they're going to finalize it tomorrow. So we're trying to figure out what really happened on it. But it looks like it's going to pass the House, and then we'll see what the Senate will do with it.
What is the Consumer Financial Protection Bureau? How is it going to affect the credit union world?
Well, they write rules and they write regulations, and even though they don't examine credit unions and banks per se that are under $10 billion in assets, they will write rules that we all have to comply with, whether it be mortgage qualification rules, whether it be appraisal issues, whether it be RESPA information, which is truth in lending kind of things. They're also going to look at things that will affect us on the home front as far as overdraft fees, credit card, interchange issues. When you use your debit card and swipe fees, they will get involved in a lot of things. One of the original rules that they were going to do was to go and target those groups that weren't really regulated. Nobody was really overseeing some of the pawnbrokers and some of the payday lenders and some of those things. And so now they're getting rolled up, and there's going to be some some consistency and some federal regulation in those industries.
Senator Warner, What has the legislature done recently on financial institution regulation that you can recall?
It's been a long time since I've been on finance and tax. There are always a few issues before and frankly, I've had very real concerns about the payday lending industry. I don't know that the state has done very much to address that, but when you actually get into the nuts and bolts of those issues and you actually look at the details of the transactions, those are extraordinarily predatory interest rates. And it's done, most people who deal with them think of them as a friendly face and a cooperative venture that doesn't even ask them too many embarrassing questions. But they're really paying an extraordinary high interest rate for that type of money. And they would be much better establishing a permanent relationship with an institution like a credit union or a bank. And just trying to gain some financial literacy, a better sense of being in control of their financial future.
What do you think can be done by credit unions or financial institutions generally to promote financial literacy?
We had the Security Commission budget the other day. They do some things. They've done some things traditionally at the high school level, but they're changing their emphasis a little more, so that they're dealing more with teachers, teaching teachers how to teach financial literacy. I've always thought it would be interesting to do kind of a consumer economics course. Just walk people through the process of learning your credit score, learning how to address issues if there's a mistake in it. We're actually working with the foster care system right now, and there's special programs targeting those people, those young people that have really led kind of sheltered existences, and getting them up to speed on how to control their own finances and their own financial destiny. There's a lot that can be done with financial literacy. It's an almost an intimate part of your lives. Most people are very uncomfortable with expressing themselves, expressing ignorance on the issue of financial literacy. They want to seem more sophisticated than they are. And I think that sometimes they can be kind of cornered by a fast-talking salesman.
I should mention that Senator Warner is on the Senate Appropriations Committee. When he mentioned the Securities Department, the Appropriations Committee goes through the budgets of state agencies, and one of the state agencies in North Dakota government is the North Dakota Securities Department, which regulates securities. And the Securities Department is one of the agencies that undergoes scrutiny by the House and Senate Appropriations Committees when they have make their budget request and ask the legislature to approve their plans for the next 2 years. Is the Securities Department a particularly large or complex institution?
It's not a particularly large one. It's kind of alarmingly small. Actually, it's only a handful of regulators, and a very large increasing workload. We've seen a lot of, I suppose you could politely call them innovative economic instruments, kinds of private financial offerings in oil country, where there's a lot of capital floating around. And some people that we were introduced to a concept called a qualified lender the other day, or qualified investor. And now I think the definition was having more than $250,000 in assets or something like that, and having a stock portfolio and demonstrating some financial literacy. And I think a lot of people have come into large fortunes of money that aren't really qualified investors in that sense of the word. They're kind of naive about trusting people, and frankly, that's a disadvantage of being North Dakota nice.
So in other words, basically, if you have a lot of money, you're considered a qualified investor even if you have no idea what you're doing?
That's true, to some extent. I think that it's pretty easy to talk these people into making rather speculative investments. They've traditionally relied on government-insured savings accounts and bank accounts and well-regulated banks and credit unions as safe investments.
Well, one of the problems has been, according to our conversations earlier, is when you go to the credit union and try to deposit your money, sometimes they can't take it because they have too much money. So, but we're speaking to Jeff Olson. He's the Vice President for Advocacy for the Credit Union Association of the Dakotas, and Senator John Warner. He's a Democrat from Ryder. His district includes a great chunk of West Central North Dakota and the Fort Berthold Indian Reservation. He is a member of the Senate Appropriations Committee, which helps to write the budget for state government for the next 2 years. Mr. Olson, I understand that the National Credit Union Administration Board meeting is coming up. Is there anything in particular that is significant about that?
Well, they've got a couple of vacancies, and so they're and these are presidential appointments, and so there's a lot of interest in the credit union industry about who's going to be appointed on there, and these are political appointments. So, really, you have an opening right now, which was a Democratic appointment, and that person served beyond their term limits and actually went out into the real world again, and so there is an open seat right now, and then. The Republican, a person by the name of Mike Friesel, who was appointed, was the chair at one point, was appointed by President Bush. His term is up as well. So there's a lot of interest right now as who and what names are being forwarded to the White House, because the White House will be vetting these individuals. Obviously, from the credit union industry, we like to have somebody that has been, has worked in the credit union.
Have you tried to push any North Dakota candidates? Are there any to push?
Actually, there's always a name or two that does come up, and again, you have to be connected politically, and you have to have. We've had some people that have served on the state credit union board that have been CEOs that said, you know what, I could do this. I could be a regulator. I know what it takes to run a successful credit union, and sometimes your name only goes so far. But I will tell you this, that Mr. Thompson, who was on the first half hour, and myself, we do get calls because of the Senator Johnson's position in the Senate Banking Committee. He can be a stepping stone for somebody to get a look from the administration. And so I know that Robbie has had calls from his peers across the country with names and trying to kick that up the ladder a little bit.
I was wondering if Senator Heitkamp perhaps had some suggestions.
I think she's
on the banking committee,
yeah.
Is she not?
We haven't talked specifically about that. As soon as some of the names surfaces, we were in D.C. Last week, and there's been a couple of names that have been out there, some high-profile industry names that are very intriguing. But until they really get vetted by the White House, we're not even going to, weigh in on it yet. So, but it's interesting to watch. It's not like electing a new pope, but we do have a lot of interest in what happens on the NCUA board. Yes.
I hope the people who elect this. Well, never mind. We were talking about financial literacy a moment ago. What are credit unions doing to try to promote financial literacy?
Well, that's part of our daily philosophy of people helping people, and the fact that we're talking about it again is the timing is so right, because there is a Senate Education Committee hearing tomorrow at 8:00, and they're looking at, I believe it's HB 1217. It's a financial literacy bill that is going to mandate financial literacy classes in the middle school level. Most of us had probably been taught how to balance a checkbook and make deposits and save money by our parents. It was the old piggy bank, and I had a paper route, and in order to deliver a paper, the Grand Forks Herald, I had to get a checking account because I had to collect the money, and I had to write the check to the Herald, and they paid me. And so that's how I learned about checking accounts when I was 11, 12 years old. Things have gotten a lot more complex with debit cards and credit cards, and some of us who were in college, they were throwing credit cards at you.
I was going to say, it's the fact that they're willing to give you a credit card when you're in college might make things a bit
and people get over their head and have been over their head for a long time. And so it is the function of the credit union to really teach people how to be money smart and to manage their money. One of the issues when you get into financial literacy and mandating in the education level is the resources. Having the teachers that can properly teach it, and having the resources that they can turn to help the kids understand it. And there are a lot of things out there that are free. We have a program that's called Foolproof that some of our members are involved in. And it's an interactive thing that's geared toward the middle school kids that get them excited about saving money and managing and credit ratings and things like that.
All right. We've been speaking to Jeff Olson, whose voice you were just listening to. He is the Vice President for Advocacy for the Credit Union Association of the Dakotas. The Credit Union Association of the Dakotas is a sponsor of tonight's second hour of the Legislature Today radio show. We've also been speaking to Senator John Warner, a Democrat from Ryder and a longtime loyal credit union customer. He is the chairman of the Senate Democratic Caucus and a member of the Senate Appropriations Committee, where financial literacy is very, very important because they write the state budget for the state of North Dakota for the next 2 years. And these are as financially literate folks as you'll find. Thank you for coming, gentlemen.